Well, hello, everybody. John King with Summit Funding, and I am here today to talk to you about where the mortgage industry is going and kind of what technology is going to look like going forward and where the industry is headed. And whether that's a good thing or a bad thing is yet to be determined, but I thought I'd fill you in on what I know and what I think about what I see. So welcome and thank you for joining me. So here's where we're at and here's kind of where we're going. Technology is absolutely automating the mortgage industry. There are services now that have been able to, for a while, get all of the information that we need to know about you. We can find out what your employment history is. It's Equifax is gathering most of the data, and they're doing it through a company called The Work Number. And what Equifax is doing is they're providing data or getting data from your employer so that your employer doesn't have to get phone calls and faxes and requests for information from lenders such as me in trying to determine whether you're still working there or ask questions and verify information about your employment. And so it is a very big brother-ish type of system, and we're already there. So there's not a whole lot we can do to change that part of the world. The information is being tracked. It's all out there. And so that is just the industry that we're in. And so what's happening, though, is that the mortgage industry, Fannie Mae in particular, has adopted a lot of these technologies and embedded them into their loan software in order to make it faster for us to verify your information and get you approved for a mortgage. So the good news is that it really is a move to simplify the mortgage process for a lot of people that qualify for these types of programs. The challenge is that it's only for certain segments of the population. So really what we're dealing with is what I talk about is rocket lending, and you know who I'm talking about when I say that. That's an example. What they've done is they've really embraced this technology and said, we're going to sell the world on how easy this process works and how we can help to make people's home buying and shopping experience easy by approving you right away. And not having to worry about going through all the validation process of getting paperwork from you. And in 5 minutes, you push button, get mortgage, right? So the reality is, though, is that it works for less than 50% of clients. The rules are so strict that it limits, and I'm reading off of a list here, people who are self-employed. There's a lot of challenges. Either A, it can't read your self-employment at all, or it reads it wrong because it can't add in certain things, like if you have amortization, or if you have depletion, or if you have a casualty loss. Those types of things, this automated system's not taking into an account. So they might say, hey, you don't qualify for the amount that you wanted to qualify for, but it's not because you don't qualify. It's because the computer only reads certain pieces of data. And the problem with the industry and the direction that it's going is these people that they hire to staff these mortgage companies are very low-level clerks, because they figure, hey, if the computer's doing all the work, we don't need to hire an expert that has a thorough understanding of the mortgage process. And that's a differentiating factor that companies like mine will never go down that road. We're going to continue to be experts so that we can use this technology if it makes sense to help ease your part of the process and the paperwork we need from you. But we can also identify through human knowledge and experience that, hey, even though I can validate this, it's probably not going to give me the full picture and not allow me to qualify you for the maximum amount we can qualify you for. And so a lot of people are being either A, underqualified, or B, denied by these rocket lending programs, when the truth is they do qualify, and they just don't understand that there's a huge difference between a clerk pushing a button on a mortgage program and a professional thoroughly understanding how the process works. There are other issues when it comes to, you have to have been with your employer for over 12 months. So if you've changed jobs in the last 12 months, you can't do this type of a loan. If you earn commission or overtime or bonus, you had to have been earning that from the same employer for at least 24 months. So again, if there's any change, even if it's with the same employer where you change status and you went from receiving no commission to receiving commission, if it hasn't been 24 months since you started receiving commission, we can't count that income. So again, another challenge that people don't understand that we deal with here when it comes to these quick and easy loans. We also run into issues when it comes to retirement income, Social Security income. You can't be, if you work in the military, You can't use these types of technological asset or income verification because it doesn't calculate military pay at all. So there's a lot of challenges with this process and how it works. But what are the benefits? Well, the benefit, first and foremost, is a cost reduction to the lenders. It's why the companies that are doing online lending can charge significantly less, because they are, through this program, if Fannie Mae is verifying your data directly through Equifax and through these other services, then the bank doesn't have to worry about later on having to repurchase the mortgage. And so that saves the bank a lot of money in potential cost after the fact if there is an issue with the mortgage. The problem is that this doesn't translate to a benefit to you on the front end because you're getting underqualified, as I mentioned before, or you're getting turned down for loans that you should have otherwise been qualified for because it doesn't meet the box of what this allows. And so what we're dealing with from a benefit perspective of the lender is great, but it's not really translating to a benefit to the consumer. The benefit to you is speed. You can absolutely get a loan process a lot faster. And if you do meet these criteria, we can move even faster than we're already closing, which, by the way, I'm closing loans in 15 to 21 days regularly. Without these enhancements, we could go even faster with them. And really it simplifies the process for you as far as upfront paperwork that we need from you. Because if you meet these criteria, I don't need paycheck stubs. I don't need bank statements. I don't need tax returns. I don't need any paperwork from you if you are somewhat meat and potatoes and meet these criteria. So that kind of gives you what the benefits are. Here's the drawbacks to kind of where the technology is going is, even in the beginning, if you end up qualifying for this relief of income and assets, and you don't have to provide any paperwork, there are so many little things that can change as we go through the process that you end up finding out later on, oh yeah, well, you're no longer qualified for the documentation relief and we have to prove the paperwork the old-fashioned way. And now we're halfway through the process and we have to scramble to get information and reapprove you through the normal process. That can be very scary as you're looking to buy a home and you have a close of escrow deadline. So the other thing is to not have to give us bank statements. You have to be willing to provide to a neutral third party your login for your bank account information, because that's the only way that we can get the data needed in order to verify your assets. And so it's kind of like storing your credit card number on Amazon. I mean, it's a secure system, but is there really such a thing as a secure system anymore? So that's the drawback, is that we're going to be dealing with situations where you're going to have to provide more data, more sensitive information in order for us to make the process easier for you. What's the price of making it easier? Is it worth it? I don't know. I guess for some people it is, and the good news is we have the option for you. But for the people that it's not worth that price, we go the old-fashioned way as well, and we can do everything manually for you. So really, just kind of want to cover the big picture of where things are going. You hear a lot about these quick and easy loan programs that, push button and get a mortgage. And there's a lot more behind it that creates challenges. And it's part of the reason why a lot of listing agents are scared to accept offers from buyers that are approved by one of these online lenders, because there are so many little things that can go wrong and they didn't verify everything up front. And that's where working with someone like myself and my team, we've got a reputation that we need to uphold in the community with our real estate agents and with our borrowers. That is really the key to where our business comes from, is that reputation. And so that's a huge difference you need to be aware of. So if you have any questions about anything that I've talked about today, or kind of where the industry is going, I'd love to help you out with that. The reality is we think that probably 5 years from now, 50% of the mortgages are going to go through this process and be kind of a push button get mortgage thing. But what you don't want to be doing is working with a bank that only does those types of loans, because then when something goes a little bit astray, you're stuck. You don't have an option to have that lender work with you and help you to find a way to get the loan done. You have to start over completely with somebody else, and that's not a situation you want to be in. So work with a local professional like me, and we'll be able to guide you through the process and help you out every step of the way. Thank you so much for listening. Have an absolutely amazing day, and we'll talk to you soon. Bye-bye.